LOB is down 29.24% in the regular session of today, the 16th of May 2025. I think the company adjusted its earnings. Let's see now. Let's get this. It reported its earnings yesterday. Okay. There was an adjustment, and also its yeah. Let's see. There was an adjustment in its earnings, and also its outlook. Let's see. We have it down here. Yeah, reported lower Q1 adjusted earnings and cut its 2025 financial guidance. Yeah, that is what is behind this plunge. So the underlying trend is a bearish one, and based on its the extrapolation of its 3 day extrapolation of its 3 day moving average, we have lower prices are expected based on its on this 4 hour chart. Lower prices are expected. Well, I don't think trying to expect the rebound to happen anytime soon may not it may not happen given the fact that the company just revised its outlook. So we have revised its outlooks and reported lower earnings per share. So we have regardless of all of that, we have upper projections. We have 136.76, 143.69. There's no guarantee any of those will print. Yeah, let's have a look at the 4 hour chart and see what's going on. On the 4 hour chart as well, lower prices are extrapolated, but at some point by next week, maybe a rebound might occur, but you can't bank on that. That's not an advice either, so you can rely on that. Let's see now, we have 128.76 upward projection. No guarantee that that will print as well. So based on a 4 hour chart, the bottom is expected by Monday. So it's expected to, this is the extrapolation, lower prices are expected to print up till Monday the 19th based on its 4 hour chart. Let's have a look at the weekly chart and see what's going on. On the weekly chart, let's see. We don't have the, yeah, okay. Yeah. So yeah, it's the outlook is quite positive. We have up till strength is expected to kick in. Okay, lower prices are expected in the coming weeks, and then up to the 2nd of June, up till early June, and after that, yeah, from second week of June or thereabouts, we high prices are expected to kick in up till the whole of up to the rest of the year. Strength is expected to be in place, but this is way out in the future. There's no guarantee that it will be the case. I'm not exactly sure that the algos have taken into consideration the fact that it is down around 30% in this session, but at least there's a positive outlook out there regardless. So let's jump and have a look at the daily chart and see where it's currently trading right now. Okay, let's come back to the market. Okay, this is the four on this 4 hour chart is it's trading right outside of its price channel. So naturally, a rebound might occur, but if it doesn't occur, the price channel will also move. So it's the price channel is also, even though it's not going to keep waiting for it to rebound, it will also continue to um, move to bring it back into the fold. So if the stock doesn't rebound, then the the price channel will do it for it. If it doesn't come back into the fold, the price channel will go and accommodate it. So that's also something you need to bear in mind. We could try and have a look. So this is the This is the daily charts. Let's compare. Let's go back to the 4 hour chart and see. Yeah, the 4 hour chart. It's let's see now. We could try and plot and see. Right now, we can't tell exactly if it's right outside of its market grid. So we'll apply the market grid and see where it is. Okay. So here, I think we have. Let's see. We have a divergence. Here we have on this same 4 hour chart, we have the stock is within its market grid. It's market grid. Yes, this is an equivalent of the price channel, so it's within it, the market grid, and it's actually in between it lines. It's in between the resistance and the support zones. So that's where it is currently trading, and we have that extrapolation that it's going to get a rebound. So the algos are reading that rebound is what's on the card. So it's actually suggesting that some weakness will come in, you know, but more of an upside. So um, yeah, that's what's going on. Can it yeah, so we have so it's some might say that um some might actually say, yeah. I mean, we saw that we saw the extrapolation. It's on this 4 hour chart is actually extrapolating lower prices slightly lower than before a rebound occurs. So I mean, usually when you have this stock trading in at least above its support zone, naturally you should expect also that maybe lower prices might equal your core even at the same time. I mean that it could go either way. So indeed, the algos were extrapolating some slight decline and then a pivot. So let's have a look at the daily chart to see where it is. Yeah, on the daily chart, it's clearly way outside of the price channel of the market grid. Yeah, you can see that way outside. So here is you should normally expect that they would naturally would expect that it will maybe bounce back, but if it doesn't do so, the market grid will gradually extend and decline and try to accommodate it. So right now, it's based on the daily chart. It's clearly outside of the price channel, and you would normally expect it to bounce back. And I think it's here we didn't see any. We saw lower prices because sometimes it's like that when it's outside the price channel. You would expect that it will bounce back, but also the algos and the machines might even say the fact that it's outside here, maybe it's going to even decay more, and that's probably what we saw. We will have a look again and see what that extrapolation was saying. Okay, yeah, I removed the moving averages. Okay, so let's adjust this to point it to three period moving average, 3 days moving average, a lot more stable, a lot more reliable. Yeah, so yes, it's extrapolating lower prices. So it's a mix of things. The Naturally you would expect a rebound to be extrapolated. Yeah, actually, some rebound is actually extrapolated. So I have to point that out. But ultimately, it's lower prices. So yeah, I have to point that out. Yeah. So let's see now. I have removed one of the indicators. Let me get it back. Okay, so that's what's going on here. So let's see now. We have there might be a report here, and let's see. It's as far back as the 24th of April. Let's see. This is a report from Morningstar. Okay, nothing fresh, but we can get an idea of what the company does. Okay, okay. Globant is has headquarters in Luxembourg, but largely based in Latin America. Is an information technology services company focused on providing digital transformation and engineering services. It generates revenue mainly by charging clients on a time and material basis for services such as consulting slash advice, customized software development and integration, and quality assurance and testing. Globant is primarily exposed to the media and entertainment and financial services sectors, which each account for around 20% of revenue. Like many of its peers, Globant's core strategy is to learn and expand, securing big clients and growing revenue in those relationships by increasingly providing these clients more services. Globant's 10 largest clients account for around a third of group revenue, with the largest, Walt Disney, contributing around 10%. Disney has been a client for over 10 years. So Globant is relatively concentrated geographically, with more than half of its revenue generated in North America. The company is now focused on diversifying geographically, particularly in Europe. Okay, so that's a brief snapshot. No fresh news, no fresh report. No fresh report from Morningstar concerning the stock. So currently down roughly 30%. Lower prices are expected. Uh, okay, well, a rebound is actually expected in a very short time, so I have to point that out. Whatever you heard here is not it's not a recommendation to buy Globant stock. Not a recommendation to buy this deep, not at all. You have to do your own research, be convinced about what you want to do, and yeah, invest in companies you know about, companies that are doing well in their sector, companies that are major players in the economy. So see what you make of all of these, and thank you very much for watching this video.